Silver prices have enjoyed a powerful rally recently, spurred on by safe haven demand, falling real yields, and a bullish breakout in precious metals broadly. But you may not realize that early June has historically been one of the weakest seasonal periods for silver. We just want to analyze the data in more detail. Seasonax here shows you the typical development of silver prices between June the 3rd and June the 30th over the last 15 years. Seasonal pattern is clearly weak. You can see there's a 20.24% annualized return that's negative, and only 5 winning years out of the last 15. However, this seasonal dip could actually offer a classic opportunity for bulls to buy into. If you look at silver technically, we can see that there's recently been this bullish piercing line pattern, which is a 2-bar pattern, where you see a strong drop, you see an open below the prior week's close. It's like bears are trying to take it lower and lower, but then you see a close snapping back above the 50% retracement line of the original drop. So this is a very strong bounce off major support, and you can see that price has also rejected the 200 exponential moving average and that sort of $30 an ounce area. Also notice that the gold silver ratio is over 100 at the time of making this video, which means that silver is priced cheap relative to gold. And that means that this potential technical area now is strong buying interest around that $30 an ounce. And if that level can hold, it could offer a good area for dip buyers to come into. Now, while short-term seasonals do point to weakness, silver does remain supported by macro tailwinds. Central bank gold buying often boosts sentiment for silver. There's US fiscal fears, which are constantly doing the rounds. That does continue to drive precious metals inflows, as well as the concern about inflation more broadly, which is also boosting demand for precious metals. Falling dollar could also help lift commodities more broadly in the third quarter anyway. So there's also risk-off pressure still simmering, inflation versus recession debate unresolved. You could find more demand coming in for silver as we move into the second half of the year. So trade risks, the moves in silver very much depend on macro sentiment, positioning, and any US dollar volatility. There's strong event risk around US data and Fed pricing, and many investors prefer to avoid trading into volatile dips without clear confirmation. So just have to be aware of that. And we don't just trade it, Seasonax it. Sign up here at Seasonax, where you can get literally hundreds and thousands more seasonal insights that are just waiting to be revealed.